Good afternoon, ladies and gentlemen. Welcome to the Atlantic Lithium Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, if I may, I would like to submit the following poll, and I would now like to hand you over to Executive Chairman Neil Herbert. Good afternoon, sir.
Thank you very much. Okay, many thanks for everybody for attending today. We look forward to taking you through particularly the DFS, which obviously we put out last week. And there are already a number of questions we've received, some 37. We're going to try and address those points within the presentation as we go through it. And obviously there are several themes there. One is regarding financing. Obviously we have substantial financing already from Piedmont. But we also have offtake to talk about. In terms of the DFS versus the PFS, obviously the numbers are very different, but also the methodology that we're applying is different. So Keith's going to talk to that. So I have with me, yes, in terms of the team, we have Len Koff, who's the Director of Business Development and Chief Geologist. And we have Amanda, who's our Finance Director. And the new face today is Keith Muller, who is recently appointed CEO. And for those of you who don't know Keith, we're very fortunate to have him. He's one of the few people in the world who has the experience of running a lithium mine because he used to run Mount Catlin. So his knowledge here has been key in the development of these very good DFS numbers that we put out. So taking it from the top, obviously we can just see there's our team in country. As we always point out, we're overwhelmingly Ghanaian and proud of it. Lots of very highly qualified staff in country to able to supplement our team. No problem getting the right people. So if you flip the slide, please. And yeah, speed read that one. Okay, so in terms of where we are in the world, we're in Ghana. For those of you who don't know Ghana, it's an established mining jurisdiction, some 14 operating mines, mainly in gold, but also in bauxite and manganese. Very good infrastructure as a result in country, which we're able to take advantage of and helps us a great deal in being able to take the project to production quickly. In terms of mineral resource estimate, for some of you who've been in the stock for some time, you'll be aware we moved from 20 million tonnes at the beginning of last year to 30 million tonnes, and then up to 35 million tonnes at the beginning of this year, with 4/5 of it in the measured and indicated category. And that fed into the DFS study, which Keith and Len have been working on extensively with the rest of our team. And we're going to talk about those numbers. Obviously, very robust numbers coming out of this, very fast return, very good results, and sits out in terms of other projects. Often analysts refer to this as being, the low cost, low capex, low opex option against peers. So you'll see those numbers as we take you through. In terms of the project credentials, in terms of the environmental footprint we have, again, it's a very good project. We're partly just benefiting from the fact that it's an all spodumene project, whereas most projects in Africa are a mix of different lithium minerals. And indeed, we're on track to take this production on a good timeline, and we'll talk about that timeline as we go through the presentation. Just a recap there of where we are in terms of the size of the company and where we are today. Very big support of shareholders in the form of Assor, which some of you will know is a very large private South African mining house, which has been a big supporter of the company since the very beginning. They increased their position of the company earlier in the year. And also Piedmont Lithium, who also have a substantial stake at the top co level, but equally importantly are earning in at the joint venture level. So they end up with an equal stake to ourselves in the project by financing. And obviously they provided substantial financing to date. They will be providing the first 70 million of the capex, so we are in no hurry to finance the balance of that. And we have around 11 million in the bank today, and obviously our burn rate is quite low because of that finance coming forward from Piedmont. And in terms of those key DFS metrics, I'm going to hand over to Keith, who's going to take you through.
Excellent. Thank you very much, Neil. And thanks for everyone joining us this afternoon. What I want to do over the next couple of minutes is we received about 38 or so pre-questions for this webinar. So we've designed the slides to try and address the majority of those. But as Neil mentioned, we'll also have an opportunity at the end to address those that we didn't in the slides. So maybe to kick off with, let's just talk about the key metrics out of the DFS. Firstly, over the 12-year life of mine, the project will generate an NPV of $1.5 billion. During that period, we'll spend $185 million to bring the project into production, which is being paid back in 19 months. So we'll talk a bit about the payback as well and how that differs from what we had in the PFS. When we reach full steady state production, 2 years from breaking ground, we'll see an average throughput over an annual basis between 350 and 400,000 tons of concentrate production. And we'll also produce 4.7 million tons of a secondary product, which is a lower grade concentrate able to be sold in the market at current prices. So first of all, let me just talk, what are we doing? What are we building? So we're building a 2.7 million ton per annum processing facility in Ghana that's being fed from our Warrior mine. This plant has been designed to 3 different size fractions. We've done that deliberately to beneficiate the material at those different size fractions, just gives us the best metal recovery. For those of you that's gone through the DFS in detail, you would have noticed that we've included a sensitivity analysis, and one of the first metrics is that we do control is metal recovery. So it's important for us to design a plant that gives us that exposure to maximum metal recovery. And then what we're also doing in terms of incorporating into our operating philosophy, we are going to be processing around 450,000 tons of ore prior to the main plant being ready. And we're doing this for a few reasons, which I'll discuss during the slides. And then lastly, we're also looking at some additional opportunities in beneficiating that secondary product, that's 4.7 million tons that we intend to sell at the moment. And then we're also looking at a flotation circuit as well as a feldspar circuit to aid to the economics of the project. Then maybe the first thing I want to address is the capex. We've received a number of questions asking how does this differ from the PFS. So I thought the best way to explain that is via a waterfall graph. So if we start off on the left-hand side on your screen now, you'll see the number we had in the PFS, $124 million for the mine and the process plant build. So where we're sitting now in the DFS is at $170 million. So I've split it out from the total capex and wanted to explain the variances between the different phases. So the first one is that additional 3% we see in capital intensity. That really relates to the increase in throughput. So we're now running 2.7 million tons as opposed to 2 million tons in the PFS. But probably more importantly, we're running 3 different size fractions, so 3 different streams in the DMS as opposed to a single size fraction in the PFS. And like I said, the first element that we control that determines cash flow is metal recovery. So this just enables us to tap into that leverage and to get maximum metal recovery. Then what we've also included in the DFS, which we didn't have in the PFS, and I'll talk a little bit later about what exactly these modular units are. We've got a lot of feedback asking, what do you mean? What is this? Is the secondary product? Is it a different product? So I want to spend some time later on talking to exactly what we mean by modular units and what benefit that brings to us. So going from the comparison with the PFS, we're really comparing 124 with 171. That's the comparison. And then we've added that additional $15 million for the modular units to bring some cash flow forward prior to having the main plant ready. And then that's the total DFS of about $185 million. And just for transparency, I wanted to show also what contingency we have in this plan. So we've included about $12.2 million in contingency. That's a little bit less than what we had in the PFS. And the logic behind that is as we de-risk the project, going from PFS to DFS, we've got a lot more certainty on the pricing. So almost 80% of the pricing in the capital estimate is based on quotations, on firm quotations for that matter. So if we wanted to place an order today, we can place it on the tender process that we've gone through. So if I just recap that quickly, so 124 to 172 is the like-for-like comparison with the PFS and the DFS. We've added $15 million as an allocation for that modular unit. So it's going to bring production forward. That gives us a total of $185 million. A little bit later, I'll ask Amanda to talk about funding. So one of the questions we've also had is, so you've got $185 million in CapEx, you've got 70 from Piedmont, so how do you fund that gap that's remaining? So Amanda will talk to that a little bit later. And then also want to talk about OPEX and how that has changed from the PFS. So I think the first thing we have to recognize is as we move from PFS to DFS, we've de-risked the mine plan. And one of the ways we've de-risked the mine plan is the type of ore that we are processing. So in the PFS, we've processed only 76% of reserves, whereas in the DFS, we're now processing 94% of the processed materials is reserves. More importantly, the inferred material is only coming into the mine plan from year 6. So the first 5 years of production is pure reserves, which is a great way for us to de-risk the geological element of the project. Then the second element that's increased our unit operating cost relates to the stripping ratio. So we very deliberately have larger pits designed in the DFS. So we've gone from a stripping ratio of 1:8 to 1:12. So by far, if you look at the table on the top right there, you would see the single activity that has the most cost is the mining contract. So the mining contract is the activity associated with excavating the material out of the ground. And because we have increased the stripping ratio, that has therefore increased the component, the single activity cost that's associated with mining. Why have we done this? We believe that there's upside in the market. So if I draw your attention to the bottom left graph, which would show you the NPV at various different price points. So the average SE6 pricing that we've used in the DFS, and I want to note for those keen observers that this is 1,600. You would see the average concentrate price is 1,500 and something, but the reason for that difference is that's a mixture between 6% and 5.5% concentrate. So this is purely on a 6% concentrate basis. As per the DFS, the NPV is 1.5 billion. And as you can see, as we move on the x-axis through different pricing regimes at around $3,000 a ton, we've just lost the slides. Let me bring that back. There we go. Thank you. Thanks, Jake. I assume that was you that brought it back. Then if you look at about $3,000 a dry metric ton for SE6, that will yield an NPV of $3 billion. And indeed, if you look at what the spot prices are today, around the $4,000 per ton mark, that will increase the NPV to just below $5 billion. So I hope this helps our investors understand why we've gone for the larger pit shells. Nothing stops us if there's a depression in the market and we're squeezing on our margins in the future to change back to the previous lower stripping ratio pit shells. But as you can see, the upside is huge. And as a minimum position, we'll have a $1.5 billion NPV, but we do see some upside in the next couple of years potentially. And that's what the result will be as the pricing moves upwards. And then maybe if I can spend some time on the modular units, this has caused a bit of confusion, and I'm actually glad it did because this is quite novel. None of our peers are doing this. You won't see this anywhere else. All the producers coming online are opting to sell DSO in the early stages. So really, the reason that we are not opting to sell DSO is there's more value to be generated in a concentrate. Secondly, we don't know exactly what's going to happen with the DSO market in 2 or 3 years from now. So we don't want to bet on the DSO market. We want to prepare ourselves for being able to sell concentrate in the early production phase. So prior to the main plant coming online, we have the capability to generate around 38,000 tons of concentrate. And at the pricing of $3,000 a ton we've used in the DFS for that first couple of months of production, that generates just over $100 million. So just to put that in perspective, so prior to our main plant coming online, we'll be generating well over $100 million in cash flow from concentrate, and additional $64 million that comes from our secondary product, which is that lower grade secondary product that we're looking to sell. The other thing that this does for us is it closes that funding gap. So that $185 million of capex, we might not need all of that. And I know there's a lot investors out there that wants to know from us, so exactly how much, what is that peak capital requirement that you have? We haven't established that yet because we're still working through with our contractors. So a lot of the working capital in many situations are actually carried by the mining contractor for the first 4 or 5 months. So we're looking to finalize those discussions. We're also looking at, once we place long lead items, that comes in sections where you pay deposits, and as you go forward and get closer to delivery, we're also trying to get the best terms and conditions out of that. So once we finalize those matters from a contracting perspective and from a procurement perspective, we'll know exactly what that funding gap is, but it won't reach over 185. So these modular units and early production opportunities going to reduce that peak funding requirement. The second thing that what it does is, Neil mentioned the 14 mines. It's more like 16, Neil, but close enough. But out of the 16 mines that's currently operating in Ghana, the majority of them are gold, although there's a couple bauxite and manganese mines, but it's no DMS operations in Ghana at the moment. So we recognize that as a project risk. So bringing these modular units in as a pilot scale plant allows us the opportunity to train the national staff on running DMS units at a smaller scale. And it also allows us to test our supply chain and logistics from the concentrate. And then that third point that I mentioned before, it de-risks us against a potential downturn in the DSO market in the future. And to be clear, if there's no downturn in the DSO market, these DMS units might not be required. But we'll make a call as we get closer to that lead time that's required to manufacture these units off site. It's pre-built, it comes to site. You can see a picture there. This is actually from a site visit I did in South Africa at the mining in Daba. These units are destined for don't have a home at the moment. This is how they look. There we go. And in terms of timeline, one of the key questions we've had, so where are you with permitting and when can we expect to see that mining license? So maybe if I just address the permitting issue first. One of the things that we received feedback from the Minerals Commission, and I must say I'm impressed with the way that they've engaged with us. The last 6-7 years I spent in WA, in Western Australia, and I haven't seen this sort of engagement from the regulator. Normally the regulator would leave you up to fail and they'll correct you once it's almost too late. But what we've seen from the regulator in Ghana, they've been very proactive and they've been guiding us through potential pitfalls as we move this licensing from the minister through to Parliament. So one of the suggestions they gave us was to combine our prospecting lease. So our exploration lease at the moment falls over 2 areas, and there's a condition in the Ghanaian Mining Act whereby you can't mine on one tenement and process it on another tenement. So toll processing is not looked upon favorably. So what we are doing now is combining those mining leases into a single entity, which would just make it much easier into the future, also from a reporting perspective. Then there's so we're expecting to get this first approval, the ML grant from the minister in this quarter we're in at the moment. And then there's about a 9 to 12 month period to do our EPA permit. So the EPA permit consists of 2 components. There's one component that relates to the environmental impact assessment. That's already underway. We can start that, and so we have. And then the second component is associated with more the social impact of the project on the local community and also on the restoration of livelihood and crop compensation and the acquisition of land. That process can only start once we have the ministerial grant of the ML. So we're looking forward to starting that in the next quarter. That's about 9 to 12 months, which will lead us to the ML ratification in Parliament. And that's really taking that EPA permit. The minister presents to Parliament and we get the approval from Parliament to proceed. Then just if I draw your attention to the bottom right, that's really the 3 phases that we are going through in terms of feed to our processing facility. So the The early production is 450,000 tons of ore going through these modular units I just described in detail. The second phase is the first year of production of our main plant. We've allowed for some ramp up, so at 75% of the full throughput rate in the first year. Now we've seen with these DMS units, they ramp up faster in some instances, but we wanted to make sure we don't set expectations we can't meet. So we've allowed for a ramp up phase, and then the first year of full production in 2020, end of 2026 at 2.7 million tons of throughput. And you can see there in the timeline at the top there, what we've done is we now distinguish between 1A and 1B. In the PFS, what you would have noticed is we only started at 1B to generate cash. So this brings me to one of the points around payback. So some of the commentary we've had is why all of a sudden a 19-month payback, whereas in the PFS there was a 22-week payback. Sorry. If I can address that, so what happens here is the minute you start generating cash is when the clock starts on payback. So in the PFS, we had that 2 million tons of throughput. So the clock really started at that higher throughput rate. What's happening now in the DFS is as soon as we turn the key on the modular units, the clock starts on payback. So in that first year, we're only generating, I'm saying only, it's actually quite amazing. We're generating almost just over $160 million in cash. So in that first year, it doesn't quite cover the full capex requirement. And then there's a couple of months once the full DMS main plant is running that pays back. So, you know, if we were to exclude the modular DMS units, all that would mean is that the clock starts later. So the 19-month payback shouldn't be a concern. It's just purely the way that we're accounting for when that first production starts. I hope that makes it clear to the investors. Amanda, if I can maybe ask you to talk to the current arrangement with Piedmont, and then also perhaps where we are sitting currently with offtake and how we're going to use that to bridge the gap for funding.
No, thanks, Keith. So I'll just give a brief overview of our offtake or our agreement with Piedmont. I think we all know what's going on, but so basically Piedmont have a 3-stage funding and milestone requirements to what in the end they'll earn 50% of the project, and for that they will be able to have a 50% offtake arrangement with us. So at the moment we've got through stage 1 where their investment sits at around 9.5% of the company at the moment. Stage 2 is now complete, so the funding for studies and exploration has been done, and we've reached now the DFS milestone. So we'll be enacting their 22.5% holding of the local, the project level. And we've started the 70 million sole funding for CapEx. And when they reach the end of that, they'll own 50%. So at the moment, we are sharing 50-50 the exploration expenses, and Piedmont are sole funding the CapEx that we're spending to get through to the 70 million. So other offtake arrangements. So what we wanted to do was wait till we had our funding requirements for the DFS, but also the available tonnage that we could do an offtake arrangement with. We kind of had plans to scenario out and increase throughput for the plant. So we knew that we would have more available to do an agreement with. We've got a number of parties that have been in discussion with us, some for up to 12 months, but really it's been intensified in the last 3 months. Where next half or this now an offtake arrangement, and what that will do will kind of provide us with significant funding for our portion. So given the numbers we've got straight without early production, we could need 50 to 60 million just to fund the CapEx for the total, including the modular DMSs, and we expect that to come from an offtake arrangement. But what we kind of are ensuring is that we maximize the benefit for shareholders. So there's numbers of combinations of off-takers in different scenarios. The ultimate is getting prepayment for our offtake, which was what we'll be seeking. But that will kind of, the closer you get to production, the more you can ask for from an off-taker. But the numbers are quite good at the moment. So we'll be able to do a deal this half. What we do know is that we know cap raise until we understand what we can get from our offtake arrangements, and because we think that will basically cover our gap. Okay, I think then I can hand it over to Len.
Excellent. Thank you, Amanda. Len, if you can talk perhaps to exploration, and I'll already see on the Q&A we've got a couple of questions on the passive seismic, so perhaps as you talk about this you can maybe give some feedback on that as well.
Sure. Yes, thanks very much, Keith and Amanda, and hello everyone. Great to be back here on the Investor Meets platform. So the exploration side, the exploration team have been working diligently away, and you would have seen we released our initial drilling results over the Awuya South 2 deposit, which is part of our resource conversion drilling, which is ongoing currently. So we've got in the order of 18,500 meters of drilling planned across the mining license area, of which approximately 10,000 meters is assigned towards resource conversion. So that's increasing confidence of inferred material to indicated material, as well as growing the resource out from strike extensions and or depth extensions where mineralization is still open. So that drilling is ongoing, and we should see a steady news flow from drilling results as that drilling continues. In addition to the resource drilling, we also have exploration drilling, so approximately 6,500 meters, which is designed to test targets defined through the passive seismic survey, as well as exploration targets outside of the mining corridor within the broader license portfolio. So the rigs are focusing currently on the resource drilling, obviously to feed into the next resource upgrade. Whilst the passive seismic survey is still ongoing, we'll then be assessing targets defined from that passive seismic survey to confirm the technology and that it works for us. We also have 20,000 meters of auger drilling planned, which is currently well underway across the adjacent licenses and within the main mine corridor license, so to speak. So that program is well advanced, as well as the soils program, which is ongoing over the Cape Coast license, which you can see on the extreme left of that figure, to infill that area with soil geochemistry for targeting. So it's quite an extensive program that's underway. Constant news flow from the drill bit for the resource infill drilling program. And we should expect to see news flow around the passive seismic survey and drill testing of targets in the near future, as well as the auger program underway currently over regional exploration targets, plus the soil geochemistry target over the Cape Coast license. So a lot happening in the portfolio currently, and a lot of news flow to come. So thank you very much. I'll hand back over to Neil.
Thank you very much, Len. So as just bringing it all together there, we're obviously very much focused now on bringing the project to production. We have a major milestone complete in the DFS, so this takes it to a whole new level. So now we can move on to completing our permitting hurdles, which we expect to complete in the next year and take the project to production. Obviously, the DFS has a different set of numbers to the PFS. We have obviously gone for higher production, which obviously provides us for benefit in better revenues and returns. We're very much focused on producing a premium product here. So we've moved away from DSO. I know there's one of the questions there is about what's the Ghana government's expectations. So like other governments in Africa, they don't like the idea of direct shipping ore. So we're taking the product up to a concentrate before exporting. The this obviously gives us better economics as well. The modular production allows us to produce earlier than we would otherwise would and provide some very significant revenues and a great return. Again, great country to operate in, very good infrastructure, 100 kilometers from port and a good road, existing infrastructure at the port. We don't need to add to that. Everything in place for us to be able to take the project forward, and we have very strong project fundamentals. So on that basis, let's move on to questions.
I think that's great, guys. And Neil, Len, Keith, Amanda, if I may just thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Guys, as you can see, we have received a number of questions throughout your presentation this afternoon, and thank you to all of those on the call for taking the time to submit their questions. But Neil, if I may just hand back to you to chair the Q&A session with the team, and then I'll pick up from you at the end. Thank you.
Thank you very much. Okay, I'm going to take it from the top. What I'm going to do is focus on the questions that are coming in now, but to the extent we haven't answered questions we've already received, we'll try and answer them as we go through. So the first question we have from Mike is, are DGR still sitting on a holding? And if so, what is this currently? Are they still selling? Well, the last time we checked, they had something in the region of 1% and so they could be selling. We don't know. We did think that the end of last week, obviously, AIM had a very bad month last month. And it seems that someone took advantage of the news to sell down some shares, but I couldn't tell you who that might be today. It's possible it's DGR, but they don't own very much now, so they don't really have very much more to sell. Some of you also asked whether directors were buying. I'll try not to answer that question because I have bought shares this year, as indeed Amanda has bought a considerable number of shares at a higher price than the current share price. But we will let you know, obviously, if we do buy shares, but I'll only do it after the event because last time I did notice that some people picked up on that. Amanda, do you want to add anything in terms of changing shareholders? I mean, we've seen increasing institutional interest as it trickles in, and I expect for the rest of the year, we do expect to see more institutional interest as we go through these hurdles. There's been a lot of interest from institutions in the DFS. We've been meeting institutions the last few days and have more meetings this week. And as obviously we go through the permitting and the offtake discussions and those things happen, I'm sure we'll see a lot more institutional interest.
So I'd say 6 months ago, we had around, say, 3 to 4% of our holding were between 3 or 4 different institutions. We're now probably up to 7 or 8%. There's been about 2% increase from the US institutions, which, we've done a few roadshows to the US. So we are getting more known out there. And I expect that as we kind of continue and go on, that this will only increase over time. So it's been good. So we've got over double what we've had before.
Thank you. Okay. We have a question from Fabian. Do you have sufficient cash to last until first project cash flow from the DMS? So obviously we have a shortfall in funding for CapEx. However, we have quite a lot of time to fix that and the offtake available. Do you want to comment, Amanda?
So we definitely need some input before we get to first production of the modular. I can say that the numbers we're talking about today will more than bridge the gap for what we need. So the offtake will be the first kind of cab off the rank in terms of making sure, like we don't, as a listed company, we can't just raise money when we don't know exactly what that number will be. We need to kind of solve the offtake problem first, get the funding from that, and work out if we need to actually get any more before that the modules are in, but it's unlikely.
Okay, thank you. As we say, people provide ongoing funding and the first 70 million of CapEx. So as such, we don't really need to go to the market anytime soon, which is good news. I think that answers the other question from you, Fabian. Nick asked, Minister of Mines of Ghana recently said no raw material should be exported. Was he talking about DSO or spodumene? We believe he's talking about DSO, but I'll ask Keith to make a comment. Sure.
So that comment that you're referring to, Nick, was obviously at Bloomberg's conference in Morocco, where Minister Jinapor mentioned that we won't export any raw material from Ghana. We believe he's talking about DSO, so much so that, the conversations we've had with the minister, he's been very pragmatic about what can be done in what time frame it can be done. So concentrate at this stage, there's no issue exporting concentrate.
Okay, thank you very much. We have a third
And
question.
sorry, Neil, if I just may add,
Please.
my apologies. There's currently no prohibition to export DSO as well. These are talks, we have to respect, as a sovereign nation, Ghana can do as they see fit. But they haven't come to us yet to say you can't export any DSO. Although that was never our plan. Even in the PFS, we never contemplating exporting DSO.
Yeah, and obviously there's financial advantage to selling an enhanced product, which is exactly what we're intending to do. Okay, so another question from Fabian: how much will Piedmont be funding? 70 million or 70 million plus 50%? The answer is 70 million plus 50%. You're entirely right. So they do the first 70 million of the capex, and then we share the remaining capex thereafter. We have a question from Coffee, which is a similar point. It says, is the Ghana government insisting on further value-added identification as a condition of granting the license? No, not at this point in time. Obviously, said we moved away from any possibility of doing DSO and providing the sale of if you like, a higher value product in country through processing there. John, will you be releasing results of the passive seismic soon, Len?
Yeah, so as soon as we've completed that survey and drill tested targets defined in the survey, we will be releasing results of that and providing an update. Thank
you very much. From Russell, do you foresee any turbulence in the run-up to the 2024 Ghanaian general election? Would a change of government adversely affect the Uwaya project? I think I'll answer this one. I mean, one of the nice things is that there has been a lot of support from the existing government, a lot of positive comments made. They're very keen to see the project get licensed. And it's even been said that the president's very keen to see it get to production during his current term, with obviously elections at the end of next year. We think that there's cross-government support, cross-party support for the project. Certainly all indications that we've had are that is the case. So at this moment in time, don't expect to be adversely impacted in any way. Will Atlantic only be considering an offtake on the full remaining 50% or look to retain a proportion to sell at market spot price? Well, to be honest, definitely have that under consideration. I'll let you, Sir Amanda, go on.
So it won't be full 50%. So we'll be doing, now we've got the increased production numbers that are likely to be 100 to 150,000 tonnes, but it will be looked at as a whole, but we would like to have a spot market. Most people will know that there's not a current FOB out of Africa. So it'd be good to have some, and we will have additional spot available to put into the spot market as well.
Okay, thank you. We have one from Mark Keith. Please comment on whether you expect MIF involvement to be and timing of that. Presumably that comes before any offtake agreement. Also, Ghana has spoken with the countries which prefer more processing. Are there any risks of disruption with regard to possible surprise processing requirements? Well, I kind of answered that already, but I'll let you go, Keith.
Sure, so certainly. So let me talk about MIF first. So yes, we have indeed continuing to talk to MIF. We want to make sure that whatever arrangement we do make, whether with MIF or any other off-taker, is at commercial terms. So that's where we are with MIF at the moment, is we're looking at those commercial terms. In terms of could we be surprised by being forced to process in country, sorry, let me rephrase that, not process, to convert to a carbonate or a hydroxide in country. There's very few countries, in fact, there's no countries that has mandated it right now. What we're seeing happening in Zimbabwe and Namibia, probably two of the closest comparisons, it is not prohibited to export concentrate, although the government has indicated that they would like it to be processed or to be converted further in country. And look, to be honest, from our side, if there is truly margin to be made in that value chain addition, we want to participate in that. So We want to work with the government, but we don't expect that will be a condition. That was one of the other questions I just wanted to clarify. No, it would not be a condition, as we understand now on our mining license, that it be converted in country. And we don't expect that to be a surprise in the next couple of months as we work through this permitting process.
Okay, thank you. We have a similar question from Robert regarding the Minister for Lands and Natural Resources, which we've kind of already addressed. So I'll move on to the next one if people don't mind. So Tim, this is one for you, Len. What is the status of licenses in Côte d'Ivoire? Are there set timescales from the government for the company activities to maintain these licenses?
Yeah, so the licenses in Ivory Coast are in relation to 2 applications in the southeast of the country. So they still are such applications. There isn't per se a timescale in Ivory Coast around approval. So these have been under application for some time now. And we'll keep pushing the government to get those through and get those granted so we can commence work on those on the shortest possible time frame.
All right, thank you. Nick also was asking, have we identified any further targets from the seismic survey and their upcoming exploration? I think you've commented largely on that, but any further comment?
No, look, just as soon as results come out from passive seismic and testing of those, because obviously we want to know that it works, we'll update the market accordingly.
Okay, thank you. Comment from Andy. Thanks, clear and concise presentation. Well done. I echo that. David asks, will we need a placing to acquire further capital? Well, not at the moment, as we've already discussed. Given the way the financing structured with Piedmont, we don't have any immediate need to go out for financing. And our first port of call is to look at the offtake portion. Further comment from David. La Vista is planning a lithium processing in Ghana. What can you say about the larger lithium and battery ecosystem developing in Ghana and how that might benefit Atlantic? How is the Ghanaian government aiding this work? Keith.
Sure, certainly. So yes, we've heard of CAA Mining and La Vista partnership, but it's important to note that there is no resource defined on that property, and also no mining lease or exploration lease awarded for that just yet. So they're working on that. How that will affect us, I don't think it will have any impact on us. You know, we've been working on our project for 7 years. I don't anticipate any other project that's just starting off now to have a meaningful impact or influence the direction that we are heading. Let's for argument's sake say that there's commercial quantities of spodumene on that tenement. It won't be in production for at least another couple of years. So I don't see that having an immediate impact on us.
Okay, thank you. We have a question from Carl. Does Atlantic Lithium plan to sole list on the ASX in 2024, 2025? I'll answer that one. I mean, as it stands today, obviously we were originally on AIM. We are now dual listed on the ASX, and actually some good trading and good interest in both markets. And we're hoping to further capitalize that in Australia and be out there more and see more in Australia to get more investor interest. Would we move across to a sole listing? I don't know. No, we don't have immediate plans to do so, but we'll see what the interest is. And obviously, if we achieve the critical mass, we may even consider a listing in the US at some future date, but it's not on the agenda today. Straight question from Bob is, what is DSO? And that's direct shipping oil. So effectively, this is shipping directly the rock that you're taking out the ground without any further processing, which we're moving away from. A question from Tim, Keith, about the cash flow from the modular DMS stage. Does the cash towards CapEx from this account towards only the Atlantic Lithium share, or is it split with Piedmont? Sure.
So after the DFS is completed, Amanda, just nod to me if I'm right, 22.5% is what Piedmont will move to on the project level. So therefore, any cash generated out of the project, 22.5% will be going to Piedmont, and the rest will be going to us. So I guess what, who'd asked? Tim. So I guess what Tim is asking, do you get all that money? Do you still need to share with Piedmont? Well, we still need to share that quarter because they have the project ownership of 22.4. Amanda, apparently I am wrong. Please go ahead.
No, you're not wrong about that, but you're getting the 10% government free carry.
Of course, yes, of course, yeah. The government free carry interest. So no, we don't get the full 100% benefit of that early production.
Okay, thank you. We have a question from Kyle asking about FID, final investment decision. Is it planned to be made post-mining permit ratification in 2024 or in late 2023?
So look, we want to start ordering long lead items. So from a de-risking perspective, our ambition is to place those orders for long lead items as not even after ratification. We would like to do that after ministerial approval. We might proceed on the basis of initial notification or limited notice to proceed with our EPCM contractor. That's likely to be the outcome, and then the full contract FID might be done at a later stage, but we have to start ordering long lead items as soon as that first approval comes through so that we can be on time to break ground in September next year.
Okay, thank you. So Bill asks, why is the share price dropping? An excellent question. A part of this, there are two sides to this. One is company specific and one is the general market. And obviously, I'm sure a lot of you are investors in AIM stocks and will be aware that AIM had a very bad month of June. So it doesn't really help when you put out news. There's a danger that people just take advantage of being able to sell down because, to be honest, there isn't much liquidity in a lot of those AIM stocks. And so if you need to liquidate your position, you liquidate it, c'est la vie. The other side of it is company specific. I mean, obviously, we're really proud of the DFS result. We think it's a fantastic result. And we hope we explained that to you today. In terms of driving further, catalysts for the share price, obviously, I think the big ones this year will be going through the licensing hurdles. And we'd obviously expect to see the ML grant from the ministry in the course of this quarter. And hopefully also moving forward on the offtake side, you'll be able to see that to provide further support, and we think a lot more interest in the stock. And as I say, we have institutions who have been steadily gaining in their stake, and as we go through those hurdles, we'd expect to attract more institutions. So we have a question from David Keith. How does the supply chain and lead time for the equipment going into your modular spod processes and for the large mine scales spod concentrators look currently? Long lead items.
Sure. So I'll address it first in terms of the modular unit. So the modular unit's lead time is 6 months. So our intention is to put first ore through those units in April 2025. We'll be breaking ground in September 2024. So therefore, there's a bit of lead time in terms of pre-strip activities that needs to take place. And during that same time, we will then construct those modular units on site. So at the latest, the drop dead date for us is we want to place an order for those units in March 2024. So we still have, a good 9 months ahead of us before we need to place that order, and we'll be well advanced with the permitting at that stage. So that's the modular units. The longest lead item on the main process plant is 44 weeks, and that's the MCC. And then following that is the jaw crusher at about 38 weeks. So none of our requirements needs us to place order in the next 6 months. If we place orders the first couple of months in 2024, we will still be able to break ground and schedule our construction activities in such a sequence that all the long lead items as they're coming in can be slotted into the right space. The longest lead probably outside of our needs for the process plant is associated with the yellow stuff, the yellow mining kit. So at the moment, we're looking at about 18 months for the large scale trucks and excavators. However, we are very fortunate again that in that early 9 months of pre-production with the modular units, we do not need large scale mining equipment. That can be done with the typical quarry size equipment that's readily available in country. So we are mindful of that 18-month lead time for the longer permanent machines that's going to be employed on the mine for the next 10, 12 years.
Okay, thank you. So Nathan, we've had a couple of questions along this line asking about, debt as an alternative to offtake agreements. Amanda, would you like to comment?
So absolutely. So look, the offtake agreements are structured in multiple ways. Signing fees, equity, prepayment, and debt instruments. So when we actually review the different proposals that are put to us, we'll be looking at all of them and making sure that we kind of make the best decision as to which one works for us.
Okay, thank you. Charlie's asking about the government's 10% and the Piedmont's 22%. So just to be clear, so that the final composition will be once Piedmont's completed all its permitting hurdles, once it's completed all its financing, is that they will end up with effectively a 45% stake in the project, as will we, and 10% government remains for the government. So I hope that answers your question, Charlie. On top of that, obviously the government has a 5% royalty currently. Clay asks, I have heard construction of new power lines has started. Is this so?
Clay, no, they haven't started. We have completed a survey, so we now know the route that we're going to take. It's completely outside of our ML, so we've started engagement with restoration in terms of land that we need to acquire to construct that. We've started with detailed engineering, but we haven't physically started with any construction activities.
Okay, thank you, Keith. All right, just one more on that subject. There were a couple of questions earlier which refer to what other things might upset the timetable. Some of them are talking about the impact of the wet season. Others asking about, potentially people in the project area, and indeed, archaeological or other sites that were identified in the survey that we did.
Sure, that's a mouthful. I'll talk first about the wet season. So our construction schedule has been designed taking consideration of when it's wet. So there's essentially two wet seasons in Ghana with two peaks in rainfall. So concrete pouring, excavation, drainage on site have considered those implications. In terms of mining through and the bulk earthworks during the wet season, bulk earthworks is a problem in that regard. But again, the sequence of construction has been scheduled to work around it. In terms of the sites that we've identified, shrines on site on the premises, yes, there are a few. We've already, during our exploration process, relocated a dozen or so. So it's not a huge problem to do so. And what was the last one, Neil? You lost me there.
There was somebody asked about, we did a survey, obviously, and there are people in the wider project area. Of course.
Yep. So a number of thousand people that we declared in the DFS that was surveyed. So those are not people that are directly affected by the project. So it doesn't sit within our footprint, but it sits in the community that services and the community that feeds into the project. So that was an engagement process to understand what are the needs of the community. So, one of the contributions we'll be making is a 1% community development fund, and that is intended to service the community as they would like to see it spend. It's not us telling them what they want. So that survey was designed around understanding what the needs are in the community.
Okay, thank you.
Hey, sorry, Neil, I'll just jump in there as well from with regards to the operational side, what Keith just said. So with regards the exploration programs, so as all the listeners would be aware, we've been drilling pretty much consistently over the last 5+ years, and that includes drilling throughout the wet season. And you're moving some significantly, large pieces of equipment around, these drilling rigs and bulldozers. So been putting drill access in, drill pads, rehabilitating those as we go, and that's through the peak of the wet seasons. And we haven't been impacted in that regard. So I think that bodes well, certainly coming into the mine schedule side of things and mine build side of things. So just wanted to add that.
Thank you, Lynn. Robert asks, have there been any further preliminary conversations with parties interested in buying out the company or the wire asset? And I'll be honest, this is a rapidly advancing sector, and very few assets out there that actually that can come to production in a reasonable timeline. So we are subject to a lot of focus. A lot of people do talk to us. We have taken the view that the way to maximize value here is to continually move the project forward and take it forward to production ourselves. However, that does not exclude the possibility that somebody will come forward during the intermediary time and actually make an offer for the company. And we don't exclude that. That's a possibility that's out there, but we're very much in the business of de-risking the project and taking it towards production. Kyle asks, will you target the remaining 50% offtake for Europe, Asia, or North American markets? Will this be allocated during 2023? Probably by the end of the year, yes. We will have done at least some of that offtake financing will be in place. In terms of its destination, we're actually agnostic. What we'll have seen, obviously, is that China has been the most interested party historically. Obviously, we did a deal with a North American party already, but we're also seeing a rapid growth of interest from European parties. So there's a lot of planned chemical plants and obviously underlying growth in EV demand, and there really just isn't enough spodumene to cater for it at the moment. So do expect interest from all sides. Eddie asks, in regard to long lead items, are replacement parts in cases of issue factored into this lead time and pricing? Keith.
Can you go to the next one? I need to digest it. I don't quite understand what that means. I'll come back to that, Neil. Let me just read it a few times.
Yeah. Okay, all right. I'm not quite sure I understand it myself. Bob asks, what the greatest impediments for negotiating offtake agreements? Are potential customers waiting licensing before showing interest in OTAs? Amanda.
Look, they're not waiting. No one's waiting, and people would have been happy that if we didn't wait the 6 months so far that we've been undertaking this. I think that from our side, it's really been the available offtake that we have. So the increase in throughput and the numbers from the DFS, the target we have for the funding. So that's been, really the key things that we've needed before we can kind of go into negotiations with parties. As the closer you get to the de-risk project, obviously the more valuable it is for an off-taker, and the more funding or the more cash or the greater shareholder benefit you can get. But I think we're at a good spot now where we can kind of do an arrangement.
Okay, thank you.
Neil, I'm ready to answer that question from Eddie. So the question from Eddie was in regards to long lead items orders. Are replacement parts in case of issues factored into this lead time and pricing? So it's either two things that Eddie is asking there. One is as it might relate to critical spares. So are we ordering critical spares as part of this initial order? Yes, we are, but they are coming later. So for example, the mantle on a cone is a critical spare, but we're not ordering two on day one. We'll order the one we need, and then we'll order another one that it arrives there before we start production. So yes, we are bringing in critical spares. And the other question might relate to, if we select, so let me make an example. If we want to buy our screens out of, say, South Africa, for example, which is, one of the countries that are manufacturing screen, and there's power outages, are we considering alternatives if there's any issues with the parts that we order? The answer is yes, that's building into our long lead item schedule. So not only are we looking at the dates that the manufacturers have promised to us, we're also contemplating any risk associated with that. And if it might be in different jurisdictions, we might add some time to the long lead items lead time as they have proposed.
Okay, thank you. We have a question from Charlie. Are there intentions need for other senior appointments leading up to production? And the answer is obviously yes. We'll be building out the team. Keith, Len, and everyone is building out the team as we speak. So you'll see further appointments. Obviously, the core executive team is with you here today. that yes, there'll be further appointments, and indeed at the board level, looking at how we might enhance the board as we move towards production as well. So yes, look out for those appointments as we go through the rest of the year. Question from Fabian, Amanda, just on how offtake deals are structured. A discounted price based upon spot that still gives ALL a certain operating margin, or rather, well, rather than talk about what we might have, what are you typically seeing on offtake deals at the moment?
So look, just to clarify that the Piedmont deal is at market. So obviously there's a number of different pricing agencies globally that we have, and we have a market price that is not discounted at all from one of those agencies with Piedmont. And with new offtake deals, what we're seeing is enhancements to the miner. So it benefits us in terms of percentages of hydroxide or carbonate price, which obviously features favorably for us. We've, Keith's done an amazing analysis that tells us what is the best deal based on what we get. And, we'll be looking to get the best deal possible on actual pricing when we kind of go into production.
Thank you, Amanda. So I had a question about the Brew short report, which a couple of people have asked about this. Just to say, yes, we continue to pursue it. We don't expect any further action from them. Obviously, they were targeting Piedmont, not us. The Piedmont share price actually went up, so I think they lost interest. But we have continued to go through the hurdles that, if you like, put a shot across their bow for publishing misinformation. Here's a good one. We've now passed the hour, so I'm going to try and wrap this up. I'm going to ask, here's a good one. Bill S., what do you see the price of lithium being this year? And I'm going to ask each member of the team to give their estimate of what the price of lithium is going to be for the rest of the year. Keith, you want to start?
Sure, it's going to average around $4,500 a ton on spot.
Thank you. Amanda?
I'm the same. So we're going to move up slightly from the 4,000 we're at, and we'll get to 4.5 by the end of the year.
Go on, Len.
I think you're right, Amanda.
I'll up that to just over 4,500.
We haven't been talking at all as an exec team about where we think pricing should be, have we?
Okay. All right.
What about your assessment, Neil?
To be honest, I think we've bottomed out on the lithium prices, and I think that it will start to pick up, as you say, probably 4,500 for the rest of the towards the end of the year. But you can see EV demand remains very strong. Destocking has already occurred. I think that the outlook for lithium is very good indeed. We're definitely in the right business. Given we're past the hour, thank everyone for their questions. I'm sorry if we haven't addressed everybody's questions, but there were an awful lot of questions. If you want to contact the company, obviously we're very happy to be contacted and try and answer your questions. But in the meantime, thank everybody for attending. It's great to have so many people on.
Neil, if I may just come back in there, and thank you, Len, Keith, and Amanda as well. Thank you very much indeed for being so generous with your time there and addressing all of those questions that came in from investors this afternoon. And of course, we will be able to give you back all of the questions that were submitted today, just for you to review and to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the Investor Meet Company platform. Neil, I was just going to ask you for a few closing comments to wrap up with, but I think you just well delivered those. So if there isn't anything further to add, what I may do is just redirect those on the call for their feedback, which I know is particularly important to yourself and the company. So could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This won't take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Atlantic Lithium Limited, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thanks, Jack.